Welcome to SMF Street, home to Main Street. For those of you who are tired of Wall Street, then just get on this street right here. What we're going to show you is the CBO S&P BIXX index, and it's very disturbing that what you have right now, today is August 12th, and we have options expiration 1 week from now, and we have such very light anemic volume. It's easy to walk prices because there's no sellers around. And the other thing that I want to talk about on this weekly chart for the banking index is as follows, and this is the bank index right here, the BIXX.X. Now, having said that, let's move that out of the way and let's get down into here. And why is this bearish? I can tell you why. Number one, we put in a weekly move, but notice that the bank index did not rally like the Dow. You had a little bit of move in your summer little rally here, but look at the amount of move that we've had down in the banking index. And we have another reversal in play. So what I really want to point out to people is that a lot of rallies on Wall Street need the banking index, because they do. That's the BIXX and the S&P banking index. And on SMF Street, we buy certain bear ETFs as well, and we also can short the index using other instruments as well. What I will show here on this chart is this is where when I come off these tops right to here, this is where the selling had started, and we met that same diagonal trend line, and these points meet perfectly, and we have a weekly distribution. This up here, the blue line is the 10-week moving average. It keeps descending. The 20-week is finally going over. This bar here is called a moving average convergence divergence bar, and basically it's got a mild weekly sell signal in play. And this is why we own other instruments such as these ETFs right here, bear and bull on the banking index, and they can make you a lot of money, because what happens is during failures is that these other trades that we have here are diversified risk management trades. However, we're weighted to the downside, and once we do break these lows, and you can use these ETFs right here, bears and bull right here. So what I would like to point out right now is these were the last lows. When we break those lows, then the broader market itself will go down. Because that and transportations, as I've always said on stockmarketfunding.com, you have all of those on the homepage. Go find them. You got a weekly sell signal starting here, and it gives me all the reason why I need to buy more ETF bears on the banking index and then cash in. Because, you know, really, truly, I'm not. What I am going to show you is that there are different key areas. This is a major support right here at 100. Well, we're way up here. And you've got this bottom right here, this weekly consolidation bottom that happened back in 09, and that's down here at 120. Okay, and basically then, of course, naturally, when we take these last bottoms right here, you can see right here on this weekly chart that this is where the 2010 move, we came down and we tested this breakout. This was the beginning of January, naturally, but there was that long move up. One thing I would like to point out is one thing that we look at is we look at things mathematically. Okay, so when you take a look at this side of the trade, the long side, mathematical from price point to reversal, but when you look at the reversal, you've got more movement down than you had going up. You've got bigger weekly selling SMF Street weekly bars, sell bars, than you do buy bars. These were very, and this was a very light volume rally that had crashed. So basically, when we start breaking down, that means that those positions that we're in using bear ETFs on the banking index pay a lot of money. What would fuel it is that this weekly sell signal is here. I can show you what a sell signal can do, and I'll be happy to illustrate that for you. We started a weekly sell signal back over here in 2007, and we were shorting it. We stayed short of this thing for almost ever, because once that weekly sell signal, this was very, and it didn't matter if it wanted to come up or not. They never got a buy signal until this week right here, 8/9/2009. That's a year ago in August when they got their first buy signal. And basically the Fed was throwing in all the stimuluses and everything that you hear about today. What I am trying to show you here is that this is a bear chart weekly, and there is a sell signal, and we own positions. That's the way that is. And when we get into the month of September, naturally what you're going to be looking for is another big fat red weekly bar next week. It's called a continuation, and break these support lines. There's another small little support over here, which would be this little gap right there, you see. And I'll draw you a horizontal line so that you can see that. And that's where this little gap up was. That's at 111.99. And basically these are the lower numbers here. Of course, always at the bottom of a bar at 106 you would have a pit stop. But so this is support 1, support 2, a broader one, support 3, support 4, and support 5, all the way down the chain. Now this only happens as this weekly sell signal gets weaker and weaker and weaker. Okay, and basically stay tuned on the banking index.